And Rob, are you in
In Reno,
Reno? Reno, Nevada. So
Reno or Truckee?
through the wonders of modern background technology, Reno. But the background is Truckee.
Uh,
So, um, and how long are you on the Big Island for?
Maybe for another week. Next week I'll be home. Um, yeah, just trying to get the year off with some fun and just chill. Oh, Ash, Ash is on.
there's Ash. Yeah. All right, let's go ahead and get into it. I am Rich Swerbinsky with Onward and Upward Consulting, and this is the big picture, the first episode of 2025. And thank you for joining us. Hopefully everybody had a great new year. And as always, join my esteemed colleague and co-host in Reno, Nevada today, his unofficial home front, Rob Chrisman. Rob, you get those nachos down?
Most of them.
All right. So,
No, I
and
didn't finish my teeth to it.
Your New Year's resolution doesn't include like eating healthy or anything.
No, I was telling Rich that I went to the gym and I was spun this morning and I rode my bike back. And as I was riding my bike back, past a Mexican restaurant,
Yeah,
and I thought, don't nachos sound good? So
yeah.
I
Sometimes you got
figured,
to have it. Sometimes you got to have it.
yeah, yeah.
and
Anyway,
and our first episode of the year, really, really pleased to be joined. Special guest this week, somebody I worked very closely with for over 8 years, the CEO of AIM, the chairman of the board of the Mortgage Collaborative, the interim CEO of the Mortgage Collaborative, and somebody with a really decorated background and history, a lot of great experience in our industry. It is Jim Park, live from Hawaii. Jim, great to see you, and thanks for joining us.
Nice to see you both. And sorry I'm not in Cleveland or in Reno to hang out with you in person, but you get me from all the way from Hawaii. So
You don't want to
happy
be
to
in
be a part
Cleveland
of it.
today. It's bitterly cold in Cleveland today, but because
Yeah.
the
The
Buckeye
weather's terrible here too. So, it's not great.
the
But
Buckeye win
your basketball team's doing great. Not your football team, but
Ball team's a disaster. The Cavs are beating everybody, and the Buckeyes, of course, another impressive win yesterday. So hopefully they can keep that train rolling. So also want to acknowledge our show sponsor, Carrie Milam, and the great team at Depth, our sponsor for the big picture here in 2025. Really, really thrilled to have Carrie and her team aligned with the show for the first several months, at least, of this year. And just a phenomenal branding, marketing, public relations firm for the mortgage industry, fintechs that serve the mortgage industry. If you want your message told, elevated presence, visibility. They have really great people and outstanding market expertise. Depthpr.com. Check out our friends at Depth, new sponsors of the show. Stephanie, thank you for the nice comments in the chat from Depth and also the nice post you made it on LinkedIn about the partnership with the big picture. So really, really excited to go into 25 with Depth on board with the big picture. So great stuff.
let me give a plug for Def PR as well. Carrie and our whole team's amazing. They've been
yeah,
part of
yeah.
TMC, family for so long. They're great people and amazing work they do for everyone in the business. So yeah, I'm glad that you're sponsored.
Yeah, I think the New Year's resolution with them is to have people drop the PR at the end of depth.
Oh,
So we'll just I'll start calling them depth.
there's no PR behind it. When did that happen?
You didn't get that memo, Jim? What the
I
heck?
did not get that memo. I'm like so far away from the mainland.
They- they-
The mail has not gotten here yet.
the the ocean liner carrying the mail hasn't gotten there yet.
No.
They are so busy and so focused on their product and helping their clients that they didn't get the word out as well as they could have. That the PR is gone and as yeah, in depth. I'm in depth. I'm out of my
I love it.
depth. Anyway,
I love it.
Go depth.
And as always, for our live audience, and I never mentioned this at the beginning. If you're listening on the podcast or watching on YouTube, where most of you consume this, join the damn live show every Thursday at 3 Eastern. You can go to chrismancommentary.com and
Did
get
you say
signed up.
join the damn show, live show?
Yeah, the damn live show. The live is, it's fun. It's interactive. It's a different way to consume the show.
I didn't
So
know we were injecting PG rated language into the show, Rich.
PG is safe. So,
All
um,
right.
yeah. So join the live show, and as always, the chat Q&A. Already some stuff filtering into the chat and the Q&A, including somebody in the Q&A noting this could be the first mortgage webinar of 2025. So breaking
Yeah.
some barriers
We could
here.
just talk about depth for the next 40 minutes.
I agree.
Yeah.
All right, well, let's go ahead and get into it. And Rob, in talking to Jim earlier this week, we wanted to, it has not been the most positive, undertones to the mortgage industry.
First of all, hey, Rich, I should tell Jim that you should feel honored, Jim, that Rich has earlier in sidebar conversations with you. He never does that with other guests. They're like in an isolation tank for the days leading up to the actual Zoom call. So the fact that he was talking to you, working out details and so forth, unbeknownst to me, says a lot about your stature.
Well, I don't know about that. I just don't like it. I don't like to get publicly waterboarded, in front of everyone. So thanks for letting me in on what you guys talk about a little bit.
Yeah, we would never,
Although,
Jim. We
although,
would
although
never,
he did
never do
say,
that. Jim, how old were you when you went on your first date? No, I'm just kidding. Just kidding.
that was a long time ago, Rob.
Never mind. Let's get back to whatever Rich was going to talk about here.
Where I was going, Rob, is, trying to, the first show of the year, try to, a little uplifting positivity, talk about some positive tones and vibes that we maybe hope could see emerge here in 25 and maybe even as soon as the first quarter of the year. So, to that end, Rob, anything you talk to a lot of people and go back and forth on email with so many, any themes, any chords of positivity that's been coming across your desk and in your email inbox as we get into the start of a new calendar year here?
I think the big focus is on companies trying to find a good public relations firm. And while I'm talking about that, have you heard of Depth? No. The you know, I'm gonna put on my Eeyore hat here, Rich, as I like to do so often. And just because the calendar page turns, the people with the far side calendars, desk calendars, they have a new day on there. Doesn't mean that the issues facing the industry or the bond market or the compliance department or the underwriting have really changed much from the last few months. I would say that the questions regarding compliance and regulation um, remain. What's going to happen with the new administration that takes power in 3 weeks, and even after that, it'll take a while for the CFPB to to establish itself for the new regime. Um, Capital markets, we've seen rates go up. The rate environment is really the same. So if you like the rates throughout November and December, you should like January and February and March. So there is some disappointment there that rates haven't gone down much. And in fact, they've gone up for various reasons. But really, the companies that are out there who have a lot of companies obviously have cut overhead. They cut overhead through 2022, 23, 24 now. The pandemic is almost 5 years in our rearview mirror, or the beginning of it. And so companies have scaled back, they've right-sized, whatever you want to call it. And the question is, and I raised it in the opening paragraph today, is your company making money if it doesn't have servicing? A lot of companies that have held on to their servicing are making a little bit of money. And the MBA reports on that, a good second quarter, decent third quarter. We'll see what the fourth quarter brings. But so many companies out there who have been able to hold on to their servicing are showing, net income, whereas companies that have had to sell their servicing aren't in such great shape. And so, companies have cut back. The people still want to own a home. If they don't own a home, there are reasons to refinance. I mean, the refi percentage is running about 35 or 40% of applications right now. So the refi market is certainly not dead. It's alive and well. And I think companies are just, going to spend the year trying to take advantage of the products that are out there, given the rate environment, given the regulatory environment, and try to help their customers. So I'm going to ask that question to Jim. I mean, Jim sees a lot of lenders. Jim, you have contact with a lot of vendors. What's your take on the mood, or what's going on out there?
Well, it can't be any worse than it's been in the last 2.5 years, right? I think there's the momentum has sort of shifted. I think people have realized this is sort of the new normal. I mean, it's hard to talk about rate environment. I mean, like if you look at the National Association of Realtors, the mortgage bankers, Fannie, everyone who projected interest rate in the beginning of 2024, everyone got it wrong, right? They said it was going to be in the low mid six. We ended up closer to 7, right, at the end of the year. And so, but I think people have kind of weathered the storm. I think kind of realizing this is, we have to operate in this environment. So they're figuring out a way to do it. You talk about you being an E-Word. I mean, there are a lot of headwinds in the industry. Certainly, immediately, there's some longer term or systematic headwinds that are really troubling. Certainly, but there are people that are innovating even under those circumstances and getting the job done. I think our members are feeling more optimistic. Our last conference at TMC was really one of the best we've had in Denver. We had a huge turnout. The dialogue was great. A lot of the mind share that happened was great. Mike Metz, VIP Mortgage, we all love Mike. He hosts a thing called $100,000 hour. I'm not sure, Rich, whether you came up with that or not, but you were part of it when we came up with it. So many great ideas came out of it, and people are out there trying to implement the best they can, right? And they're trying to make sort of marginal improvements to stuff that they're doing. But I think not only the rate environment, just the servicing issues, there's some broader challenges that the industry faces. Like if you look at, you talk about refi numbers, which I'm shocked at the numbers that you quote, because I don't know how much. I thought we didn't have much to refi at this rate, but if you look at first-time buyers, it's really troubling numbers, right? It's like the lowest in recorded history, I think, the number of first-time buyers in the market. The average age of a first-time home buyer has moved up quite considerably in the last decade or so. It's like they're like almost Rich Swerbinsky's age, right? Like they're getting old. Like I think it's like 38 or something. And so I think it's those are troubling issues. How do we get people into their homes faster and earlier? There's some interesting innovations that are taking place out there that's trying to do it, but it's going to take everyone's effort, I think, together.
And I wish I could take credit for the $100,000, but the true genesis of it, Mike Metz, famously of the Mets Market Minute, as part of the Chrisman commentary newsletter, phenomenal 60-second recap on the week Mike does every week that goes out with the Friday Chrisman commentary special edition newsletter. The true genesis of that, it was in the back of a cab where a lot of great things happen, evidently.
By the way, when you come to our conference, when you go to the $100,000 hour, they talk about stuff that you can't talk about on, in the sort of open format. So they get really, into the weeds and get really honest about what's happening. So join us if you want to for that.
I need to ask Jim. Jim, well, the last year or two for me, I do a little bit, smidgen of business travel. And it seems like 4 out of 5 flights, there's some problem, some delay. They haven't loaded the first class food. The plane got too close to the jetway, so they have to back up and do it again. I mean, there's all tires are underinflated. There's all kinds of problems with flights. Do you have you fly a lot too, and you fly internationally. Do you have a favorite airline that you use, or do you like just go on to Priceline and figure out who's going to be the cheapest?
You know what, my the way I approach flights is who has the direct flight, because I don't want a chance connecting. So whoever has a direct is who I go with, because every airline is, I think, it's deteriorating, right? I mean, like, the service level, it's not like the old days, right? When you can smoke in the plane, right, Rob? And, get all sorts of cocktails and all that, whatever you got. Everyone, it's just like you're barely getting some peanuts nowadays. Not, you can't even get that because of allergies.
No.
You're getting like pretzels, not even very good. So, but I would say the best one, I think Delta, for me, I like Delta the most, but it doesn't really matter. Whoever has the direct flight into whatever city I'm going to is what I do.
All right. Good answer. Thanks. All right. Sorry, Rich, to go off the rails
No,
so early
yeah,
in the show here.
Obviously used to it after
By
several
the
years.
way, I had a hard time visiting Rich when he was with TMC, because there was almost no direct flights into Cleveland, which really
No
stunk.
airline wants to go there.
Man, I had to connect. Well, it was easier to get to Truckee, Rob, than to Cleveland. And you don't even have an airport. You have a little private little plane thing.
Well, Jim, since you brought it up, Truckee does have an airport, and in Truckee, you can always tell it's Friday afternoon because the private planes are all flying into the Truckee airport, and then Sunday afternoons they're all taking their, there's certain nice parts of Lake Tahoe where there's a lot of money, and a lot of those folks have planes. The Reno airport, that said, the Reno airport is very nice. It's only got, a couple of wings and limited number of gates, and it's very user friendly. So I like those airports. Some of these airports now have become like city. I mean, you look at Dallas, Fort Worth. I mean, there's an example. It's like a city all by itself. It's incredible. Anyway, we need to get back on mortgage. Rich, get us back on course here.
Well, Jim, you mentioned the prevailing headwinds to the mortgage industry, that still exist as we go into the new calendar year here. But as somebody that's been involved with and in and around government policy for pretty much all of your career, could there be some potential tailwinds maybe coming to the mortgage industry here in 25 through government policy, through things that maybe legislators could do on the federal level? To help maybe open up the housing market a little bit, help with affordability. Things have been mentioned with the home builders, obviously, help that group, and maybe some other ways to loosen up the housing market a little. Anything that comes to mind to you?
Yeah, I mean, we'll see. I mean, I think this is this new Congress, both houses are Republican, marginally on the House side, right? That's, by a couple of members. Obviously, you got the administration. So it's sort of lined up to hopefully do something, because typically you have one house, Congress on one party, administration on a different party, and so on, and things don't happen. But we'll see if they are able to get something done in terms of a more comprehensive strategy around housing overall. I would say this is a group that's kind of, tax-friendly group coming in. And so maybe there could be something related to tax strategies in terms of incentivizing new construction would be great. If you look at the low-income housing tax credit, which primarily has been an instrument for driving rental housing development since 1980, when I was a young lobbyist, in DC. I mean, that has produced about 3 million units of rental housing since 1988 or something like that. We need something like that on the ownership side, right? You can do ownership with the low-income housing tax credit, but the problem is that it's always oversubscribed. There's not enough. And so I'm hopeful that maybe something like that comes about. There are the fundamental issue around housing and the issues that we deal with in terms of people, average age being 38 to buy a home now. And, most people in San Diego, I think we're talking about Truckee. I think you have to make over 200,000 or 300,000, I think, in Truckee to buy an average home. San Diego's 300,000. You have to make 300,000 to buy an average home in San Diego. Cleveland, a little cheaper. So it's pretty good there.
Like 30K, yeah.
30. No, it's gone up to about 60, I think, 60, 70. So but that's a real issue. right? And the only way you're going to actually really change people's ability to access these housing is through more housing. The rate environment has a marginal short-term effect on getting people in. You also saw during the pandemic when they did the tax credit for homebuyers, right? That had a short-term boost, but those are very short-term. I think long-term, you just have to build more housing. That's why kind of tax incentives, implementing change locally in terms of regulations, zoning requirements. I always find it interesting that, there's sort of this thing called NIMBY, as you know, no one wants affordable housing or whatever built around them. Even one of the most progressive city in this country, San Francisco, can't get affordable housing built because people don't want affordable housing in their neighborhood because it's more congestion, whatever. And so it is something that we as a country have to change overall from the ground up.
This wasn't notes, Jim.
So
Real quick, Scott Turner, the new HUD secretary, any familiarity with him? I guess any knowledge or past dealings with Scott?
I know he has some. I think for the previous administration, he has done some work around housing related work. But I think he's sort of, sometimes you want someone from with a clean perspective coming in and just kind of take a fresh look. But I don't think he has tons of track record that we can kind of reference at this point. But, I think, the old way of doing things have not worked, frankly. And if you look at the HUD budget, it's like 70 billion or whatever it is every year. It's a lot of money, but for the challenge we're facing, it's not enough. I mean, if you think about the amount of units you need to create as a country to keep pace with that, we need more resource. The likelihood is that the Congress is not going to write a check, but they would be willing to do a tax cut, right? And so at the end of the day, they're both the same thing. They're not, there's no difference between, tax refund and spending the money on it, right? So, but I think that's what's more likely to happen, I think, this coming year.
it's a, that's a tough situation. And I would argue that presidential administrations are very limited in terms of what they can do. In fact, the last time that I picked up the Twinsburg Times, which is where Rich lives, and Rich, I don't know, Jim, if you've ever been to Rich's estate, but they're 5-acre ranch.
It's massive. It's massive. Like huge yards. For all this, how many dogs do you have, Rich? All your dogs have to run around.
His home occupies a large footprint on that 5-acre ranchette lot. And they were talking about, they were trying to put in some affordable housing about a half mile away. And in the Twinsburg Times, Rich was quoted as saying, we don't need this kind of rampant development in my area. So
we're actually working on an ADU right now in my backyard for all the teenagers and the dogs. So we're just going to put them all back there. So,
by the way, talk about like a little sign of, if obviously this country is producing maybe 1 million units a year, or whatever it is. It's not enough, and we're like so behind in terms of number of units. That's where you're going to get a little bit more of a balance between supply and demand in housing, right? We're just not going to be able. You can't just incentivize people with more, I don't know, down payment assistance or lower rates. It's just not enough to really move the needle. Fundamentally, it really has to come from the supply side. For the long haul, and ADU is a little like I don't know. It's something that's sort of working in some parts. There are 13 states, I think, that have
California.
California is one of the best, not only because I live there, but it has like one of the most aggressive ADU policies. There's like Oregon, Washington, Maine, I think. And if you look at California, about 20% of all new units that are created in California are ADUs right now. 20%. It's a huge number, and that is going to continue to grow. And it's a good way of adding housing to and get some local support around it, because they want to. I mean, we used to call it granny flats, right? Now it's not just for older folks, but it's for your kids. It could be for other things, right? So,
Rich's dog. By the way, Jim, Rich's dog is on the top 10 most wanted list by the United Parcel Service, UPS.
Well,
there's Rich's dog on the wall, like a wanted poster.
We did a couple when I
I've
was
seen
at,
them. I've seen them
we did a
active.
couple of strategic planning meetings at my house, and one time I had the whole staff here, and my dog bit the Amazon man when the staff was here, which they can attest to. It was,
It's an ugly situation.
yeah, so,
Yeah, I
but
mean, talk about getting it's hard enough to get homeowners insurance. Like dog insurance must be really tough.
and Frankie, if you go to themortgagecollaborative.com, Frankie, that evil French bulldog that's under my desk right now that I'm kicking every few minutes here, he's actually he's the AI chatbot on the TMC website still.
Still to this day.
Had a good, very nice note in the chat here from Dottie Shepik. Thoughts about
Body.
how to increase the first-time home buyer opportunity. One-time close C2P product that could be sold to the agencies at closing. Jim, I don't know if you remember this, but way back, it was right before the Mel Watt scandal happened at Fannie Freddie. They were working on a saleable construction to permanent program. I remember just through our partnership with the GSCs, that was something they were working on. And then the Mel Watt thing happened, and then Watt was replaced by, I forgot who replaced Mel Watt at FHFA, but and then the pandemic happened, and it kind of got lost in the lurch. Could that be a solution, a saleable C2P product to the GSEs?
I mean, I think that would help a lot, right? That's one of the gaps we have. The challenge with housing construction, as you know, is it's like multiple. There's a lot of elements to it. So financing is a piece of it. I mean, this year, I guess it's this year, immigration law policy is going to have a direct impact on labor force. If you look at the construction labor force, completely tied to the immigration policy of this country. Depending on what happens, that has a tremendous impact on our ability to build. Think about where tariffs. We're talking about tariffs in Canada. Guess where our lumber comes from that builds all the housing in this country, or bulk of it, Canada. So that's going to have a direct impact. And so there are a lot of things that play here that's going to make an impact. I think in the short run of whether we can get back to building the number of housing we need. Financing is a piece of it. I think construction to perm is a great thing. I think there's needs to be some streamlining of local zoning and regulations that have to make it. I mean, to build to take it's taking 3 years, 4 years to build, from ground up a house is just too long, right? And that's why a lot of people, aren't doing it. It just doesn't make economic sense. And that's also why, if you look at the average price of homes being built in this country, it's like $500,000, I think. The average home that's being built in this country is $500,000. The average price of a home in this country, I think, is like 400, I think, right? And so we're building housing that is much more expensive than your average house because of all of these issues. It's expensive to build, labor's not there, permitting is tough. All of those things adds up to more expensive housing. And all those things have to change for us to kind of get back to normal. One fact that's kind of interesting is just if you look at like 1960. I don't know, Rich, you weren't born in the 60s yet, but if you look at 1960 to 2000, that 4-year period, the home to income ratio really never changed, right? The people's income and the home prices went up around the same percentage during that 40-year period. You look at year 2000 to now, it's doubled. The price of homes have doubled the rate of increase of income. So are we shocked that people can't afford to buy these homes now? I mean, there's just such a gap between income and price that we have. The only way you can solve that is by creating more inventory overall. So,
hey, Rob, you bought your first home in the early 60s. Can you, corroborate Jim's
FHA, it went first FHA loan.
case number
All right,
one?
everybody, you guys just need to settle down for a second. You actually are not that far off. My parents bought their first home in 1967 with a VA loan, and it was, I don't mind saying it was 6.5%, 30 years fixed, and they paid it off in 1997. 30 years, because they didn't that environment wasn't they weren't getting calls every week, to refinance. regardless of what rates did. And I don't even know what rates did between 67 and 97. I think they went down for the most part, but they had a VA loan, and it was to the with the local bank, and I remember going with my mom, driving down, delivering the mortgage check every month.
There were no
So
trigger leads in the 60s. Ironically, though, the rates are exactly where they are today. So,
could be, yeah, could be, yeah, right.
but this is the big picture. I'm Rich Swerbinsky with Onward and Upward Consulting, presented by our friends and show sponsor Depth, branding, messaging, visibility for mortgage industry and mortgage fintechs. Depth is our new show sponsor, and we want to thank them. Rob, you were about to say something there?
Well, I was going to say the house that they bought, um, yeah, rates are about the same, but the house they bought, I think it was $27,000, 3 bedroom, 2 bath ranch house in a town called Saratoga in the Santa Clara Valley. Um, Lord only knows what that house, well, actually they remodeled it after my dad sold it. But you know, the house prices have just, and Jim, what we haven't even touched on insurance, for homeowners. And I posted a link, I forget if it was earlier this week or late last week, talks about how for many homeowners now, the mortgage, the monthly mortgage is not the highest cost item for many homeowners. It's property tax and insurance. And so you can beat up, consumers can beat up their lenders all they want to get that extra eighth or quarter even in rate, but they have to get insurance. And you're dealing with local communities in terms of property tax that in many areas keeps going up because they add, oh, we're going to have a bond issue for the new sewage treatment plant or a bond issue for the new firehouse or whatever it might be. Those add-ons are increasing property taxes in many areas. It's tough. It's not cheap to own a home. It's not for the
Yeah,
faint of heart.
it's not surprising, therefore, that people are, the rate of home ownership for certain populations, particularly younger folks, are going down. And what someone's asking about hamburgers, but anyway, I'm not gonna look at that. But I think what's happening with property insurance is not only is it going up, sometimes you just can't get it. And so what do? You get forced place from even more expensive insurance from your lender, and it's a real issue. I mean, historically we said, hey, set aside some reserve for unexpected situation, boiler breaks, whatever it is. Now you have to deal with all these other costs, tax, insurance. That's really making it very expensive to own a home. I mean, but the challenges, like state like California is trying to keep the insurance rates from going up. The problem is insurance companies aren't making money, so they leave. And all that's done is making whatever insurance companies left be, smaller insurance firms. And then you have to add a, state plan. You end up paying way more anyway, right? For a policy that's not even as good. And so that's what's happening. The challenge is, I mean, there's a bigger issue. I don't want to get too political. The bigger issue is we get more disasters every year. Insurance companies are losing more money every year, payouts. And that's just the fact, and it's been like that for decades now. And it's just accelerating. And so it's just sort of the reality that you're supposed to do kind of a positive thing, right, Rich? But we're like pointing a lot of these negative stuff. But I do think that's a real issue that we have to look at as a country. Federal insurance policy is something that people don't like to talk about, but I don't know.
And once again, you can't hit the president, who's ever president, can't come in and wave a magic wand and change insurance companies' policies. Getting back to Ashley Alexander's question, which Jim, you just brushed by, she wanted to know the cost of a hamburger. And I was going to point out to Ashley that there's a big difference between, say, a McDonald's hamburger where Jim is and the hand massaged Kobe Wagyu beef burger that Jim enjoys. So,
wait, if you come to Ashley, if you come to my house, it's free. So free burgers.
There you go. We heard it here first.
By the way, just on a positive note, I do want to leave it with a positive note. And there's a company that I'm involved with. I invested in a long time ago, called Nestimate. And this is where I want to talk about innovation just a little bit, because people deal with these issues, cost issues, access issues. Nestimate's a company that, what I love about them was, what a lot of people can't buy on their own, right? So it's like a co-purchase platform for sort of millennials and younger. And so people buy properties together, right? And that they're able to, it's a sort of a kind of a technology platform that makes that whole process easier. So it's sort of the notion is second home before your first home, right? You buy together, build equity, and then hopefully that turns into something in the future as well. And so these innovations are happening around the challenge that we're talking about. And people aren't going to, I think people aren't going to stand still and just let this stuff happen. They're going to innovate around it. So hopefully more innovations like that will come about, and, and we'll see some positive movement this year, and hopefully some tax policies, some bigger plans around housing. If you look at the campaign this past year, everyone was talking about housing, right? Because that's become a top 5 issue. Historically, it's never made the top 10. No one talked about it, but everyone was talking about it in the campaign. So hopefully something happens this coming year.
Jim, on the technology and innovation front, one of several unique and really cool things about the Mortgage Collaborative, now 10 years old, TMC, right? More than 10 years? It's
more than 10. It's been about 12.
12 years.
On 12.
Original,
yeah.
But the technology fund, how's that been going? Any developments with the TMC Tech Fund? Obviously, mortgage tech investment not robust these last couple of years, but any green shoots or sprouts from the TMC Tech Fund you've seen recently?
Yeah, a lot of good stuff happening. We're learning a lot, and the whole idea was so many of our members were users, purchasers of mortgage tech. And so what we wanted to also do was to give our members the ability to be an investor, someone who can help to design and shape the future technology that helps their business. So we invested over the last several years with 8 companies. All of them are still around, which is a good thing.
That in and of itself is a miracle that all 8 are still around, given the landscape.
It is, and as you know, with the venture capital world, typically what venture capitalists do is they bet on 10 and hope that 1 or 2 survive. Is typically the strategy, and that all 8 is still around is quite a testament, particularly given the funding environment over the last 2-3 years, because the venture capital world has, just like the mortgage side of the world, really got tight, and there was very little funding, very few IPOs happening during this period of time. The expectation in 2025 is that we'll begin to see a little more IPOs that'll loosen up some additional capital towards these these different companies as well. So we feel good about it. Like we have a couple of companies like Halcyon and a few others that have just really show real promise of growth. And so we were early investors in them, and we're hopeful that they'll do well in the future.
Had a note come into the Q&A about some sort of incentive maybe for existing home buyers to sell. I've talked about the Swerbinsky plan on this show for many years, but Jim, any thoughts, along those? Something maybe we could see.
Rich, do you want to fill Jim in on the details of that plan and
I could just make it up in my head and just respond.
My plan is to, provide a tax incentive for non-institutional owners of investment properties to sell, waiving, reducing the capital gains tax or threshold, for, individuals that own 10 or less investment properties to sell, obviously, to an owner occupant. It's something I've been banging the drum on that, to no avail, but
yeah, no, you know what? Actually, there was a piece of legislation around that, but never really made it that far, which is unfortunate because it's a great idea, right? It's hard to build.
Too forward thinking for many politicians to grasp.
Yeah, it is. But we know that it's hard to build housing, so why not unleash the housing that's already built towards ownership? And that makes so much sense. It has with a lot of these things, it has tax implication, right? It has revenue implication for the U.S. Treasury, and so when they go to pass a budget, and they have to embed this into their budgeting, it usually they run short of the money and they can't come up with the dollars needed to implement this. So a tax cut has a budget impact, tax spend has a budget impact. And so they have to figure out a way to make that work budgetarily when they pass a bill every year. So.
And a good point by John in the chat, who notes, why do we keep wanting the government to somehow subsidize housing? Why can't it stand on its own? We have huge deficits. We're talking more tax credit. That's kind of been the MO of the incoming administration. So, yeah, valid point. But yeah, we'll see what, if anything.
But yeah, but the challenge is this: it's unless you do something like a tax incentive or subsidy, they're not going to get built. And so if we're okay with average, right now, average price of home being $500,000 for a new home being built, that's okay. If you have to make $300,000 to buy an average home in San Diego, that's okay. Then we can just let it go, like let it be. But if we don't feel good about that, then we have to figure out something, as a country around that, if we think housing is an important piece of it. So anyway, on a positive note.
You talked, Jim, earlier about, trying to find a way to reduce the average age of the first-time home buyer. Certainly affordability is a huge, kind of roadblock to that right now. But any other thoughts on maybe innovative ways to make home ownership more attainable for young people outside of these market forces we can't control, like rates and, to a lesser degree, home prices?
I mean, there's a very simple answer to it, but it's not going to happen, which is we have to have more young people moving to Ohio, Michigan, Alabama, low-cost states. Then you can actually solve the problem. But I don't know if people do it. But I don't know, Rich. I mean, it's a hard issue. There's such an income sort of an income disparity right now challenge that people can't afford to live in where they live, where they work. And so it's going to be a tough thing to accelerate unless we start to build more housing in this country. Right. I think that's, at the end of the day, that is the issue. That is the solution for all of us.
Or just more supply.
Yeah.
Whether you build new or based on the Swerbinsky plan, unleash existing housing stock.
Yeah.
The problem with moving, you talk about people moving to Alabama, having them move to Alabama. The problem with moving it to Alabama is that you actually end up having to live in Alabama or North Dakota. I'm going to tick Dave off. I saw that note from Dave about North Dakota.
Hey, wait. Didn't Scotty Pickle live in Alabama?
Scotty Pickle.
Yeah.
Scotty Pippen lives in Alabama.
You're gonna get a hate mail from Scotty. He loves Alabama.
I'm going to get some email with general counsel on the bottom of it. I try to avoid those. But the interesting thing is when Rich and I have talked to many people over the years, and you see people at conferences and so forth, and you hear all these ideas, and there are so many ideas out there. It's almost as if we need a housing czar to let's get the agencies to sign off on 3D printed houses. Let's get the investor community, to streamline some of these property types that they don't buy. Let's get the investors to do this. Let's get local governments to do that. Let's do this. Let's do that. I think everybody can come up with probably 5 or 10, if not more, 15 things about supply and demand. And I keep going back to, if I was in my early 20s right now, and I just graduated with a degree in food science, which I did, but let's say I was a computer programmer, I wouldn't put buying a home high on my list of things to do. When I graduated from college, and Rich, no, that wasn't during the Eisenhower administration or anything, but when I graduated,
food science, that's never come up. That's what your bachelor's degree was in, food science?
And you started out this program talking about eating nachos.
And all you eat is nachos and M&Ms.
You must have failed that.
Diet Coke. Geez, all right, let's take a breath. But buying a home when I graduated, that was high on my list. I wanted to know where I was going to work. And once I got there, I just thought rent was a waste of money and I wanted to buy a house. Now, if I was graduating, if I was in my early 20s, I don't know if buying a home would be high on my list. It would probably be more, where do my friends live? I think, I can live anywhere. I'm gonna work remotely, you know, and once they get there, they might think, in a couple of years, I want to live in Miami. And a couple of years after that, I might want to live in Bangor, Maine. I don't
Yeah.
think owning a home is as high a priority as it was some years ago.
But it's still the biggest wealth creation machine we have,
Absolutely.
right?
Absolutely.
Because of the leverage, right? And you can't $100 in the stock market is $100 in the stock market. You hope that it goes up, right? 10, 20%. $100 into housing is really $1,000 into housing, right? And if that goes up, so we all know the multiplier effect of housing, and that's why we have to kind of, I think, spend more time educating folks. I also think that young people feel disconnected from reality around this issue because it's so unattainable, and we have to make it more attainable and make it part of their dream, because I think it's kind of left them. So I think it's on us.
Financial education.
Yeah.
And in the chat noted, I think it's right. Clark Griswold did, I think, major in food science as well, Rob. You remember there it is, the sheet tray nachos. Look at that. Wow. So, all right.
Is that just for yourself, or is that for other people around you?
It takes a lot of calories to write a daily commentary, Jim.
Rob kicking off the new year in style with a economy-sized plate of nachos. So, well, good stuff. And as always, the time whirls by here, and I want to thank everybody for spending part of their Thursday afternoon here with us on The Big Picture. And I want to thank our show sponsor, Depth, and I want to thank our guest this week, Jim Park. Jim, thank you so much for joining.
Yes, thank you very much.
Early morning in Hawaii. On January.
Well, thanks for hey, I would have never said yes to something like this unless it was the two of you in the middle of my vacation. But what a nice way to kick off the year. Happy New Year to both of you, and I hope it is going to be a more hopeful year for housing. But we'll see. There's a lot of unknowns out there, but but we've made it through some tough times, so we'll do it again, and I'm sure we'll prosper together. And DEF, I want to thank all my friends over at DEF now. I got the memo for supporting this as well.
Who were huge to us in the early days of TMC. When we had no money and really needed to get that thing going, they were really a huge ally to us. And very thankful for that. So
great people.
All right. As always, thank you for spending part of your Thursday with us, Rob. Great to see you. Enjoy the rest of those nachos, and enjoy Notre Dame. Georgia is kicking off in about 10 minutes. And we'll see you next Thursday at 3 p.m. Eastern on The Big Picture. And until then, have a great rest of the week and weekend, everyone. And we'll see you next week. Take care, everyone.
Thank you, Jim.
Thanks, Jim.
Thank you, guys.
All right.
Happy New Year. Bye.